So, introductions. You've heard from myself so far and Ben Steele from Steele Financial. We're an accountancy firm based in Bristol, but we cover the whole of the UK. We even have clients outside of the UK, but predominantly UK based, and I'd say naturally mostly Bristol. But we do have clients as far down as right at the bottom of Cornwall, as high up as Middlesbrough and Leeds, and everywhere in between. We are still a general practice, so we probably have a client in every industry. But we are developing a niche in the hospitality industry. Bristol's very big for that, as most of you will know. So lots of independent restaurants, bars, clubs, etc. And because of that, it's quite a close-knit industry, we find as well. So owners of each of those restaurants and bars will then recommend us to others, and so on. So we've developed quite a big group of businesses in that area. Hence why we're putting on the workshop for hospitality. One, because of that, and two, because it seems to be one of the biggest affected areas at the moment. So wanting to make sure that we're sort of putting out a bit of help for those people. There's me. So we've also got Kayleigh Graham here from Capitalise, as I mentioned. So Capitalise is where you'll find all things funding. Probably better if I leave Kayleigh later on to introduce Capitalise more in a bit more detail, but that's who Kayleigh is. And then we have Lee Ward. So Lee's from Peninsula, as I mentioned. It's HR, but it's also health and safety as well. And again, you'll hear from Lee later on. Cool. Okay, so we're going to get started. We're going to do a really quick run through of Xero. So for some of you who know Xero well, I'm going to try to keep it as brief as possible, but some of you might not understand what Xero is. So Xero is an accountancy and bookkeeping package. It can do everything from your bank reconciliations, your VAT returns and payroll. We then use it to go further with clients. So we do management reports, we do obviously year end, etc. on there too. Xero is one of those good packages where it can be as little and basic as you need it, or as detailed and complex as you need it. So for those of you who know Xero and use it yourself, you might be using 5% of what Xero can do, and that's fine. But Xero can do so much more than that, and that's why we like it. We're gold partners. What that means is we have a lot of clients using Xero, so we've become specialists in it. In fact, we're a Xero-only practice. So we took the decision a while ago to only focus on Xero so we can become true experts of it, as opposed to jack of all trades. So we don't deal with things like QuickBooks, we don't do Sage, Free Agent, etc. What we can do, though, is if a client moves to us using that software, we can do all of the work to transfer you to Xero for you. So it's not the end of the world if you're not on Xero, but we highly recommend it. And actually, I'll go into it a bit more, but especially for hospitality and restaurants and bars, etc., I would highly recommend Xero for your industry for lots of different reasons. I won't go into all the reasons today, but if you're not yet fixed to a package, or you're looking around, or you're still on spreadsheets or desktop software, make the move to cloud. And if you're a hospitality, which I presume you would be being here, I would definitely recommend Xero. So as I said, Xero is basically your all-in-one for your business. So it's where you can store everything to do with your business. You can have all of your customers and supplier contacts, all of your bank reconciliations, your VAT returns, your payroll, your sales invoices, etc. It's all stored in the cloud, so you don't have to have desktop software. If your device can get onto the internet, then you can get onto Xero. So as you can see there, you can use your tablet, your computer, your phone, etc. We have clients who genuinely like that fact, because they can be on the train. Historically, they could be on the train going around and doing their bank recs as they go. We've got construction companies who are able to do quotes on the tablet and send them there and then at the customer's house. But then you've got, specifically for hospitality, you've got the fact that you can have your EPOS system at your till on a tablet, which a lot of EPOS systems are now, and you can have Xero on there, but you can also then integrate Xero with your EPOS system. And again, we'll come back to that in a moment. So it's a really, really good piece of software. Definitely recommend it. So if you haven't looked at it yet, definitely recommend you taking a look. This is just sort of basically repeating what I've said. So you can automate tasks. If you send out regular invoices to people, you can set that to automate, so it will do itself. So if you send the same type of invoice each month, set it up to automate. You can even set it up to automate, but not yet send out until you've adjusted a couple of numbers. So you might have a regular customer who buys something from you every month, you can set that up as a repeating invoice, so it does it all for you. All you do is pop on at the end of each month and just change the amount or the quantity or whatever you need. It gives you a full picture, so once all the data is on there and you're using it, you can then run reports. So there's basic P&L reports, as business owners would need to know, and there's also sort of more complex reports that your accountants can then use. The other good thing that most of our clients like is that it reduces the amount you have to send us. So gone are the days where you have to send us loads of bank statements, buckets of paperwork and receipts. All of that can be gone with Xero. If you're using Xero and you haven't pretty much gone paperless, then you're probably using it wrong with your accountant. So it should pretty much be 99% paperless. So that's Xero in a nutshell. I don't want to go too much into it. I'm not here to sell Xero. It's just, it's a big thing about my firm, and it's a big thing for hospitality. We've had clients who have come to us. We've had a few restaurants and bars in the last 2 weeks who have come to us using spreadsheets and Sage Desktop. We've got them onto Xero, hooked everything up already, and already they can see the difference. So I wanted to mention it because there are still hospitality businesses not using cloud accounting, which I can often forget, and then it blows my mind when I realise. But we're still getting them come to us, really modern, funky hospitality businesses in Bristol that are thriving, but are still using very sort of archaic bookkeeping systems. So it does exist. So just want to mention that. If you've got any questions on this, Xero, the website has loads of information on there. There's videos, etc. Or at the end, I'll give you my email and you can always ask me a question. So this is the bigger part I wanted to introduce on today's workshop. And that's why I had to sort of introduce Xero first for this to make sense. So Xero, the biggest thing for us as a firm and why we specialize in Xero is it has the biggest marketplace for apps and integrations. So all that means is if you take your till, for example, your EPOS system, the EPOS system will be using a piece of software. So that's the app. So a lot of you might have heard of what's one of the most common ones, Square. So Square has a till system that a lot of restaurants and bars use. And that is the app. That piece of software is the app. The integration is then how it connects to Xero. So if you're using a till system, whether you're a hotel, restaurant, bar, cafe, etc., if you're still manually then putting your sales figures into Xero or into QuickBooks or whatever else, then you're missing out on an integration. Sometimes they're free, so it's definitely worth doing. Sometimes you might have to pay, say, £20, £25 a month. It sounds a lot. A lot of business owners are shocked by £25 a month, but if it can give you back 2 hours per month of your time, that's made up for it already. It also gives you a better level of detail. So rather than putting in sort of summary numbers each time, you're able to feed in the full detail. So Xero has all of the full detail that is coming from your till system. And that's really important for analysing your business. If you don't know how much of something you've sold, how often do you sell it, how are you going to be able to make decisions on the business based, on terms of pricing and stock control, etc. So if you've got apps and add-ons, make sure you're integrating them. That being said, a really quick sort of warning is not all integrations should be used. So we have clients who come to us at the other end where their accountant had previously set them up with every app and integration going, connected it all up, and then created a massive mess on Xero and then come to us and said, help. The reason being is to use apps and integrations as an accountant, you have to truly understand what is going on, how they work. It's not something that I often warn. It's not something accountants should just dabble in. It's a service that they can offer if they should want to, but they should really, really understand it, because otherwise it can actually create a bigger headache. So some apps and integrations are great, but some can cause more of a headache and more of a mess. So just be careful before you just go and switch on an integration and connect up your stock system or till system or timesheet system to Xero. Just be careful, check with somebody who knows what they're doing first. Sometimes it's great, but as I said, the odd occasion it can create more of a headache. So just be careful. So I just want to run through a couple of the common ones that we see on a regular basis. So I mentioned Square. Square is an EPOS system. So on those little touchscreen tills that most places have these days in hospitality, quite often that will be Square. So it's a really, really good system, especially for the food and drink industry. But we have seen a small B&B use it as well, and it seems to work just as well. So Square is a really good system. So if you don't have one yet, or you're looking to change, or you're looking to upgrade, definitely check out Square. Deputy. So some of you may have heard of Deputy, but it's a bit less common than Square. So Deputy is for staff scheduling. So if you've got a big workforce, if you've got 10, 15, 20 staff all doing different shifts, which is common in hospitality, Deputy is a good staff scheduling software. Some of these softwares actually link together as well. So it's not just about softwares that integrate back to Xero. Some of them will integrate together. So Square and Deputy, I believe, I don't know if they still do, but they used to have an integration. So your scheduling of staff can actually link to the till systems. So it just makes it easier for when people are logging onto the till system, they can clock into Deputy using the EPOS system, etc. So there's lots of integrations available, and it's not just about to and from Xero. They can also link together as well, so it's worth having a look. Good Till. So some of you may have heard of SumUp. SumUp is like a little card reader, a really common one. But Good Till are now with SumUp, and we would recommend Good Till for stock management. If you're running a hospitality business and you don't have a stock management system, do look into it. And this is a bit counterintuitive of what I'm saying. Even if it's a spreadsheet of stock control, just make sure you're having stock management in place. We see a lot of hospitality businesses that come on board and have no stock management or stock control. One of the first questions we'll ask a client when we're onboarding them is, what stock do they hold at that time? Because that's important for financials, as you probably all know. It's quite rare we actually are able to get an answer, which used to shock me, but because it's becoming more and more common, I didn't mean rare, more and more common, it's less and less shocking. So if you run a hospitality business and you don't have stock management or stock control in place, please look into it. It can be a fancy app that integrates with your till system. Square do have their own inbuilt stock management system. So if you use Square, you could look at using that. But there are other stock management systems that then link to your EPOS system as well. It's really important to get factual numbers on a weekly or monthly basis and a true profit and loss margin on how you're doing. You have to have stock management in place. Otherwise, your numbers are nonsense. So if you don't, the P&L you're currently looking at won't be true and correct. That being said, there's a very, very rare occasion when it is almost correct. So if you run a hospitality business, for example, we've got a pizza restaurant and they don't hold any stock. Everything they buy is fresh, it's used at the time. So as they cross over month to month, they don't really have any stock left. In that situation, it's not as desperate to have stock management, because month to month, if you're not holding stock, then it won't make a huge difference. But 9 times out of 10 you are, especially if you sell alcohol, there's always going to be stock. So so if that applies to you, make sure you are looking into that. Stripe. So most of you, I imagine, would have heard of Stripe. Stripe's a good way of collecting online payments. It could be that you sell through your website. So a lot of restaurants, for example, over COVID, adapted and started selling home cooking kits. Some of you may have used those. So you may have created an online site where you can sort of sell some of your goods and products on there as well. But not just that, you might decide to take bookings. We're talking to a lot of our clients at the moment about taking bookings and taking deposits because of no-shows that are really ruining the industry at the moment. So you might decide to use that. So Stripe, again, integrates back to Xero, so it will cut out a lot of the manual entry if you are using that. And Pleo. So a big area that's often overlooked is employee expenses. So a lot of hospitality businesses will have employees who might have to quickly nip out and buy, some herbs that they've ran out of, or a bit of chicken, or a bottle of alcohol or something that you've run out of. And they're going to use their own money, and then they're asking for it to be refunded, and the whole system gets a mess and it gets a bit lost. Pleo is a really good system. So you can get an employee card that they can use. You load it up, you put payment limits on it, so they can't spend any more than you've allowed. and it will only have money on there that you've loaded onto it. So it's not like a credit card where they can just go and spend. You have to have loaded money onto it. So we use it here internally as an office card. So I'll put £50 a month on there, and then anybody in the office then has that card to go and get milk and tea bags, etc. So works really well, comes with an app. So once you've used that card to spend, you just take a photo of the receipt on the app that comes with the card, and that receipt then attaches itself and gets sent off to Xero and keeps it all nice and tidy, especially for VAT purposes, as you probably know. So those are sort of my top 5 at the moment. Those are the ones that we're seeing mainly. Those are the ones that are all working pretty well at the moment. So have a look at those if you were thinking of anything along those lines. So I'm going to really quickly run through this part now. At the end, there'll be an opportunity for me to send you the slides. So if you want a copy of the slides in PDF at the end, pop me an email and I can send you a copy. So I'm going to whiz through this. So don't worry about taking notes too much if you can. I'm just going to go through my top 10 points about bookkeeping and accounts. Keep it really quick, keep it really basic. So number 1, as I said, make sure you are using software, but make sure it's cloud software for lots of reasons. So if you use spreadsheets, definitely move to a software. If you're using desktop software, again, I would recommend you move into a cloud software. Of course, my go-to is Xero, but there are other ones available, as they say. Number 2, have a separate business bank account. It is ridiculous how many businesses I still see that are operating out of their personal bank account. Please, please, please do not do that. That's not just about making my life as an accountant easier. That's about making your life as a business owner easier. There's probably other things that will have an effect. So, for example, when it comes to getting funding for the business, etc., I'm sure Kayleigh will probably tell you that it could cause an issue if you're using your personal bank account for your business. So please make sure you have a separate business bank account. Make sure it's all going in and out of that one place. If you accidentally use your personal account to do business spend, just quickly do a transfer and try to get out of that habit. There's lots of tax reasons, which I won't bore you with, that you don't want to be using personal. You don't want to use your business bank account for personal spending either. So please make sure that the business bank is used for business only, and personal spend and personal bank is kept separate. Use systems and softwares that integrate. So again, it's not a necessity, but it's definitely an advantage. If you do, it will save you a lot of time, a lot of energy, and it will give you more insights into your business as well. And that's the key point for you as a business owner, is the more insights you can get, the better you can make decisions on the business and improve it. This is a big one that a lot of people are usually shocked at. Bookkeeping should be done weekly. As a practice, if we do bookkeeping and VAT for a client, we do it weekly. We are emailing you every single week, chasing you for receipts just for those last 7 days. Clients now love it because they're not being asked for receipts from 2, 3, 4 months ago. The most they're being asked for is receipts from 6 or 7 days ago, which 9 times out of 10 they then have and can find and remember what it was. So if you're doing your own bookkeeping, or you have your own accountant or bookkeeper doing it for you, talk to them about doing it a lot more regularly. We would advise weekly, but as regularly as possible, you need to be keeping your books and records up to date. Really, really important, especially over the last 12 to 18 months. When you needed funding, you had to be able to give financials in an instant. So if you were doing your bookkeeping regularly, that wouldn't have been an issue. For all of our clients, it wasn't. So it sort of just highlighted and helped us explain to clients why regular bookkeeping is so important. Having an accountant that understands software and your industry. So I mentioned earlier about when you talk to your accountant about cloud software or apps and integrations, make sure they actually know what they're doing. Most accountants can fiddle and click their way through a bit of software, but it's very different to understanding it. And it could cause a bit of a mess if they don't fully understand what they're doing. So it's not necessarily their fault. It's a very new area in my industry. So a lot of the traditional accountants won't have learned this stuff. They wouldn't have been taught it. They wouldn't have been using it over the last sort of 20, 30 years. It is relatively new. So it's not necessarily their fault, but there comes a time when sometimes you have to move away from traditional and go to somebody that truly understands what it is you need, just to make sure that your business doesn't suffer from that. And also your industry. So again, accountants, bookkeepers can usually deal with most industries, but to have one who understands your industry will take your business to the next level. So if they actually understand how hospitality works, the pain points that you have, the regular issues and problems, it will give you a lot more insight and help. So something to think about. Invest in a digital EPOS system. So if you're still using one of those old-fashioned clunky electronic tills, where every time you press sort of enter, the till pops out, and you've got this roll of paper going at the same time, and a little digital screen. They still sell them in Costco, actually. Please invest. They don't cost a lot anymore. If you go to places like Square, SumUp, etc., they all sell the hardware just as much as the software. It's really, really cheap. Sometimes the biggest cost is a tablet. It doesn't have to be an expensive Apple tablet. It can be, a cheaper version. But definitely invest in a digital EPOS system if you don't already. Keep all your receipts. It doesn't have to be in paper form. It can be digital. Keep photographs of your receipts, scans of your receipts, etc. File them away. You don't have to have shelves and shelves of folders like you used to back in the day. It can be all on the computer, but keep them all. At the moment, post-COVID, we are seeing so many VAT investigations. And the first thing they will ask is, can I see receipts for your top 5 expenses? If you can't produce them, they're just disallowing that VAT. We're seeing it so much since February, post-tax season. We've had 5 investigations, not us, our clients, no fault of their own. The letters actually state this is a random investigation. You've been picked out of a hat, not in those words, but in so many words. And it can be as easy as that, name out of a hat, potluck. So make sure you are keeping receipts. If your accountant is letting spend go through when you don't have receipts to back it up, you might think that's great, but when the point comes and you need that evidence, it could get you into a bit of a problem. So make sure you're doing that correctly. Stock control I've mentioned already, so I won't linger on that one. As I said, lots of financial and business management reasons why you need to make sure you have stock control going on, at least monthly. Live if you can. So a lot of the stock management systems can operate live. Every time you sell something, it adjusts your stock levels. Every time you buy something, it adjusts it, and it's a live basis. So that's ideal situation. But even if you just do a physical, old-fashioned manual stock take once a month, make sure you are doing that. Supplier bills. So if you are using software such as Xero, make sure your bills are being uploaded, make sure the correct due dates are being put on. If you do, you have a ready-made supplier bill system in place. Because if you're uploading your supplier bills to Xero and you're putting the correct due dates in, when you're then looking at making supplier payment runs, you can be looking at Cashflow and make sure you're using those credit terms with suppliers. And as long as that data has been put on correctly, you'll be able to run a report within seconds, which will give you all of that information. So something so small can actually have quite a big effect and quite an advantage. And lastly, employee expenses and cash. I mentioned employee expenses earlier with Pleo, but cash, a lot of restaurants and bars and hospitality are moving away from cash, which I love. But some still do use it. Cash causes the biggest headaches with hospitality. What we see often is you'll take cash takings, you'll then use a bit of cash for some expenditure, and the difference is then banked in an ideal world. But what we're seeing is, for some reason, that isn't working out correctly. And 9 times out of 10, there's this cash that nobody can account for. You've had £100 in, spent £10, but only banked 50. Well, where's the other 40 gone? And nobody can account for it. And the problem is as the business owner is that's going to be taken as though you've taken that money personally and you'll get taxed on it. So if you are still using cash, really, really make sure you are keeping a tight control on that cash. Otherwise, you could end up with a bit of a personal tax bill. Cool. Okay, I'm going to take a breather now, thank God. And I'm going to pass you over to Kayleigh from Capitalise. So you may have to bear with me 20 seconds while I figure out how to give Kayleigh the control.
No problem. Thank you. I will introduce myself in the meantime. So my name is Kayleigh Graham. I am one of the senior partnership managers here at Capitalise. We as a business have been around since 2014, and essentially what we do is partner with over 2,000 accounting firms as well as UK business owners to advise on capital. So far, we have advised on nearly £1 billion worth of approved capital to UK business owners. So I'm going to cover a lot today, so please stick with me. As Ben said, he will get slides out to you after. And if you have any questions, please feel free to pick up with me afterwards. Now let me see if I can change slides. There we go. So capital, the road to recovery. Essentially, as business owners, our view is very much that you guys should be focusing on building revenue, making that revenue profitable, doing all of the things that Ben talked about there. And actually, despite the fact that things are opening up, lots of businesses are still in survival mode. And so actually being able to find capital from as many sources as possible is hopefully going to help to prop businesses up and help them push through as we start getting back to some kind of normal. So when we think about capital in businesses, we push that into three main categories, and that is raise, recover, and protect. So from a raise perspective, that's really about kind of debt borrowing as well as grant funding. Recovery is really about kind of those bad debts, people not paying you, going out and recovering that money that's owed to you, as well as taking advantage of kind of the kind of government side of being able to claim back funds from any research and development activity. And then protect is really about credit scoring and positioning your business in the best light to be able to access capital. So thinking about the UK kind of business space, actually 5.9 million UK businesses, over 360 lenders out there, and pre-COVID, 80% of businesses in the UK were profitable. So that side is actually brilliant, but actually pre-COVID, 78% of businesses had less than £10,000 in their bank account. As you can imagine, when COVID hit, that number increased significantly, and that people had even less money. Pre-COVID, 36% of businesses were using overdrafts and credit cards to run their businesses. That almost doubled over the last year. And so actually, despite the fact that we were kind of saying all these businesses very, very profitable, the reality is that lots of these businesses are constrained by cash. That is made significantly worse by kind of some of the behaviours and kind of typical things that businesses do, which is that actually on average, they allow a week to find the funding that they need, and then spend an hour researching and kind of preparing to do that. And then 80% of businesses apply to just one lender, which is typically their bank. I am an ex-bank manager myself, and I can tell you that definitely 80% of businesses do not get approved by their banks, as some of you may have been through that process. But unfortunately, bank criteria is pretty strict. There are very tight restrictions on what you can and can't do, and that does mean that lots of businesses fall outside of that. Thinking about banking itself, I think something that's really important to highlight is just how much banking has changed, because actually in the last 15 years, you've had 15,000 different bank branches closed. And actually with that, you've had around 55,000 bank managers come out of the market. And so gone are the days of being able to pick up the phone to your bank manager, have a really good chat, explain the situation, have them come down to your premises, understand what's going on, and then start kind of dishing out funds to support you. Actually, as many of you may be aware, you're going into call centres, you're speaking to people that have no idea about your business and trying to explain what's going on and what you need and to try and get that support. And the reality is it's just not there anymore. And so something that is super important to us as a business is making sure that all UK business owners have access to that support and actually access to all of the information and what's available to them. So let me just move on. So actually thinking about types of lending before I dive into kind of support available right now, I think something I was really keen to highlight is that actually just because people are aware of a kind of standard bank loan, as it were, that's not the only type of funding available. There are so many different categories of funding, be that working capital finance, which is that kind of straightforward loan, monthly repayment that you make on whatever date that is. But actually you've got invoice finance. So for people that owe you money, actually if they're on 30, 60-day terms, for instance, being able to get that money in sooner. Property finance, if you own kind of the venues that you're in, absolutely being able to refinance those and kind of bring more money out of them. Asset finance, if you're revamping facilities, buying new tables, chairs, all that good stuff, you can absolutely finance them as well. Trade finance, not so applicable to the sector, but it is there. And then merchant cash advance is something that is really, really common in the hospitality sector. And essentially those EPOS systems that you've got that are taking all of those card payments, what lenders are able to do is look at the average kind of monthly takings that you have, lend you kind of 1 to 1.5 times that amount. And then instead of having that fixed monthly repayment that can sometimes be difficult if you've got quiet seasons or actually you're having to close up because of COVID and things like that. But actually what happens is that for each card payment that's made, a small percentage goes back to paying your loan and the rest goes into your bank account as normal. So if you have a brilliant month, great, you pay off a big chunk of that. But actually, if you then have a pretty slow time, or actually you're having lots of cancellations and things like that, actually you haven't got that kind of looming fixed monthly repayment over your head. So as some of you may be aware, last year, British Business Bank came in and introduced bounce back loans and the Coronavirus Business Interruption Loan Scheme, or CBILS as it was known. And actually those schemes ended on the 31st of March. And on the 6th of April, we had the Recovery Loan Scheme come in. So this was essentially the follow-up scheme and actually had lots of similarities to the CBILS scheme. So still the 80% government guarantee, there are no personal guarantees for you guys to sign for less than £250,000. Actually, if it's above that amount that you're borrowing, you've only got to give a personal guarantee for 20% of that borrowing. So still pretty attractive there. There's a 15% interest rate cap as before. You still have to have been negatively impacted by COVID, and actually the terms are still up to 6 years. The other thing that's the same is still the 25% of 2019 turnover, which is actually a pretty attractive proposition, because had they changed that to 2020 turnover, that would have significantly kind of reduced the amount that people could be borrowing. So thinking about the opportunity there, I think one thing that definitely frightens some business owners is that interest rate of the kind of up to 15%. But something I wanted to highlight is that actually, if, for instance, you are a business that took advantage of the bounce back loan scheme, that was at a flat 2.5% interest rate. So if you took £50,000 from a bounce back loan and then go on to take a £50,000 recovery loan, at worst case, kind of up to the 15% interest rate, actually at a blended rate for that £100,000, you've got an interest rate of about 8.7. Which actually, for context, is pretty good. So bank overdrafts typically sit between 5 and 30%. So arguably could be significantly cheaper than a current overdraft that you may have and be using. And from a credit card perspective, provided you're not in a nice kind of interest-free period or anything like that, actually credit card rates typically between 25 and 40%. And so again, very, very competitive in that space. And I think, generally speaking, a lot of business owners in the UK see business debt in the same way that we see consumer debt, which quite frankly is that unless it's a mortgage, it's bad, right? And we don't want to be in debt. But the reality is, when it comes to running a business, debt is very much a force for good. It's there to help support you to accelerate your business. And I think the really important thing, as I say, about having an advisor and someone to talk to about this is that if you come to us and we have that conversation, actually, if debt is not the right thing for you, we can help support you in other areas to see what's going on. But actually, the first step is understanding what's available to you and kind of the implications of doing that, and not necessarily shying away from it if you need that support. So the flip side of that is that actually, if debt funding isn't what you're looking to do, grant funding is definitely another option. And typically for us, that falls into two categories. So you have innovation grants and capital grants. So innovation grants are very much there to help support a specific project or something that's kind of innovating in the sector. And capital grants very much there to support kind of existing operations. So actually you want to buy new plant and machinery, things like that. There may be local kind of capital grants to support with that. What I would say is that actually £397 million worth of grant funding into UK businesses in the 2019 year. And actually the average amount in that was £196,500. So it just shows that there are huge opportunities in that space to help support as well. And in terms of the benefits, very much no debt for the business. So if you are someone that is a little bit more skeptical about debt and not wanting to go down that path, grant funding could be a great option. No security and no equity requirements, right? So essentially free money. Now, there's definitely some work that goes into it in terms of pitching it, understanding why you're eligible, finding those right kind of providers. And we partner with a company called Granted to do that. And they are very much sector experts on what's available and what can help with, but definitely something to consider if it's not something you've looked into so far. Moving across from kind of raise into recovery, actually on that kind of innovation side of things, if you are doing something innovative, actually it's worth a conversation with your accountant to understand what can be done in terms of recovering some funds back into the business. So actually two primary criteria that kind of fall into this space. If you are doing a project that kind of advances overall knowledge or capability in the sector, or actually that you are going forward and looking basically at something new that's going to help resolve an issue in the sector, then absolutely worth a look. And actually only 8% of UK businesses go through and claim money that's actually available to them. So there is, again, a huge pool there and things to look at. And if you do qualify, up to 33% of the money that you've spent can be recovered. So again, worth a conversation with accountant around anything that you think might be in that space, and just understanding that. The other side of recovery is debt recovery, and this is definitely one of my favorites. One of the first things that happened in COVID was that businesses stopped paying each other because they were unsure on what money was coming in, what money was going out, and so they just stopped paying each other. And actually, 98% of UK SMEs will suffer a bad debt or commercial dispute at some point in their lifetime. And actually 1 in 5 businesses end up cancelling off over £31,000. So I think the main thing that comes out of this is ultimately that 89% of businesses don't go ahead and chase those unpaid debts. And I think there's 2 reasons for that predominantly. One is cost and one is time. The time spent chasing people for money, I think it's often easier to just go, we're not going to get it back, and kind of leave that alone. And the other is cost. Actually, if you have to start getting solicitors involved, it starts getting expensive. And what then happens is this going to cost me more than it's worth? Is it worth going down that? And so people will kind of just give up and let it go. But actually, if that is money that's owed to you, you've got contracts in place, people owe you money, you absolutely should be chasing that, right? And I think I always say to people, there's 2 reasons someone's not paying you. Either they can't or they don't want to. If they can't pay you, actually what we've seen in the UK, we had a moratorium in place that meant businesses couldn't push each other into liquidation. That's being lifted very, very shortly. And so actually, if you've got a business that is not paying you because they can't pay you, what's going to start happening is people are going to start putting in those winding up petitions. And then what happens is you fall into a queue of whether you will or won't get paid, depending how much money is available in that business. And so I say to everyone, if a business can't pay you, the sooner you get that process going, the more likely you are to get that money back. And that can feel quite harsh, and it can feel like something that's got a bit of teeth in it. But the reality is, it's the right thing to do for your business. If you've provided a service or delivered something, you deserve to get paid for that. And so actually taking that further is really, really important. And if it's the flip side, if they don't want to, the other thing we often get from business owners is, we've worked with them for a long time, we don't want to upset them. And what I always say is, they clearly don't care about upsetting you, quite frankly, because if they did, they would have paid you on time. And chances are they are paying someone. So it's just not you. So they don't value that relationship as highly as you do. So I think that's really important to think about. As a business, we partner with a company called Escalate, who are an award-winning law firm, and they essentially go out and recover these debts for businesses on a no-win, no-fee basis. So they will take a look at it, essentially give you free legal advice and say, yeah, we think we can go and get this for you, or actually, no, we don't. But if they think they can, they take that on, as I say, no win, no fee, and move that forward. And they have an 88% success rate. So they're pretty good at what they do, but definitely worth thinking about. If you've written any debts off in the last 3 years, or you've got anything ongoing, definitely worth a conversation there. And last but not least, protect, which falls into credit improvement. So something that we've seen happen, particularly across the last kind of 6 months, is that because of COVID and the amount of businesses that were shut and the amount of things that went wrong, unfortunately, all businesses are starting to see a downgrade in credit scores. Because even if you are a pizza restaurant that pivoted through the pandemic, sold at-home pizza kits and did a brilliant job, the reality is most pizza places in Liverpool were shut and did nothing that entire time. And so as a sector, when everyone kind of files those new accounts, things don't look too great. And so if you sit in that same kind of bubble with all of those other businesses, they're going to look at the average, see that generally across the sector, things didn't go too well. And what will happen is that everyone's going through a credit downgrade. Now, the issue with that is that depending on where your credit score, it affects a lot of things. I think people are aware of how their personal credit score affects them, but not so much the business credit score. So actually, a score of under 30, for instance, you're going to struggle to get approval with any funders. You are going to struggle with credit insurance for suppliers, all that kind of stuff, because actually you don't look like a credit-worthy business. Score of under 50, you may get funding, but it's going to be expensive. So for instance, on recovery loan scheme, you're definitely going to be pushing that 15% mark. And then at 70, you're doing okay, you're in the green, but there's always room for improvement, right? These scores are out of 100, and so there's definitely more that can be done. And so what we're really encouraging is for businesses to look at this and think about what can be done. And we've partnered with a company called Lightbulb, who essentially work with all of the credit referencing agencies across the UK. They do a review of kind of where your business credit score's at, talk you through what they think they can do to improve it, give you a target. So for instance, if your credit score was 30, they would say, okay, based on this conversation, we can get you to 75. And then if they get you there, great, you pay them a fee. If they don't get you there and they got you to 73, for instance, you wouldn't pay them a penny, but you've still benefited from the service. Now, I caveat that with they have a 100% success rate at the moment, so chances are you will be paying, but it's definitely worth it. And I've just popped in an example around that, because actually, if you were a business looking for kind of £250,000, credit rating sitting in that kind of 50 space. So you're going to be basically eligible for funding, but those higher rates. Potentially, if you've got that interest rate of 15% and you're going through that, your total cost of, in terms of interest that you're going to pay is £106,000, just over that. Actually, if we go through, do credit improvements, this is a live example that we did, got the business up to an A rating, they were in the high 80s, they got an interest rate of 4%. And so their total interest payable was £26,000. So you've saved over £80,000 in interest for what cost them £1,500 on a credit improvement service. So that's really just to bring it to life and kind of show you how much of an impact that can have, particularly if you're thinking about accessing capital. That is everything from my side. I appreciate that was a lot of information, but hopefully very useful. And I will absolutely be around till the end for any questions. Thanks, Ben.
Thanks, Kayleigh. I'm trying to see if I can now switch back.
No problem. I'll stop my remote control. There you go. You should be back.
There we go. Brilliant. Okay. So Kayleigh went through a lot there, but all of it is perfectly timed, especially for hospitality and the type of workshop we're doing, because most hospitality businesses suffered, even those who managed to, as Kayleigh said, pivot and offer a new service and new offering. There was still a massive downturn in income. We have had a few occasions where some of our hospitality clients actually probably had almost the best year that they've had in a while, but that is rare, and sadly we are aware that it's rare. A lot of ours, they managed to stay afloat, they managed to keep going, but they did suffer quite heavily. All of their staff were on furlough. Some of them have had to then be made redundant. Income dropped to pretty much nothing. Some hospitality weren't able to pivot, or it wasn't cost effective to. So what we're now seeing as businesses are coming back out of that, yes, things are picking up, some quickly, some not so quickly. But sometimes to get going again, you do need a bit of cash injection. So, you might have to restock, you might have to rearrange furniture. That might mean you have to get new furniture. You might not have had outdoor seating and now you have to be able to trade. So all of these things might mean that you might need a bit of help. And as Kayleigh mentioned, debt isn't always a bad thing. So don't be afraid of it. If you have a business and if it's still going and there is still potential for it to keep going, and you've done a cash flow or a forecast, which we'll come into, and it can still survive and continue, but you might need a little bit of an injection, then that's not a bad thing. That's a good thing. As long as you've done the numbers and it plans out and works out, then that's absolutely fine. So don't be afraid of the word debt. And as Kayleigh mentioned, there's lots of different versions available. So it's not just about a big loan that you repay every month. A lot of these EPOS systems and merchant card reader, people will offer funding and loans. And as she said, it's a lot more bearable when they're just taking, pence off of each sale as opposed to hundreds of pounds every month. So definitely have a look around. If it's something you need, have a look. Best option, have a conversation with Kayleigh and she'll be able to help you out as well. So off the back of that, I'm just going to go through some of the main cash flow issues and planning issues, just because it fits in really neatly. So there's a few steps you can start to put in place. Some of them may seem basic, but even sometimes the basic things aren't being done. So even if you find these things basic, just let it be a refresher to make sure you are doing it. So number one, to begin with, have a cash flow. I would probably, even post-COVID, calling it post-COVID, even post-COVID for businesses, I would still guess 90% of small business owners don't have a cash flow. When COVID first hit and everybody was coming at us to need CBILS, this was pre-bounce back loan, which was ridiculously easy to get. When it was CBILS and other funding that businesses suddenly needed help with, they all needed cash flow, and not one business that came to us had one in place. Now, cash flow and forecasting is always a service we've offered, but like a lot of services that accountants can help with, sometimes business owners don't recognize the value of it until it then suddenly is needed desperately. So we would always say, number one, for that purpose, always have one in place, just have a basic one in place. But number two, as a business owner, I would find it near impossible to run a business without a basic cash flow. How do you know what's coming in? How do you know what's going out? How do you know if your bank balance is going to dip below zero? Do you need a bit of a cash injection? Do you need an overdraft? Can you pay your wages? When's the best time to pay your suppliers? All of these things can be on a basic Excel document. Just your income, your outgoings. It's from a cash perspective, so you don't have to worry about the details of whether it's gross or net, or whether it's P&L or balance sheet, or all of those accountancy things. It's just look at your bank account and what's the total amount going in and out each month, plot that out and start to get a better idea as to where your funding is going to be. Check what your bank balance is now, do those in and outs for the next sort of 6 to 12 months and follow what that bank balance will then be. And that will give you a good indication as to whether you're going to be in trouble or not. So if nothing else from this, just go away and have one of those as a very basic. Number two, there are apps that can help with this. So if you've got a spreadsheet version in place, or you're like me, who you're a bit more techy and you want something a bit more fancy, then there are lots of apps and integrations back to those that link with your software. So certainly Xero, but other softwares as well. There are forecasting and cash flow apps that link with those. What they will do is they will read on a daily basis all of the data going in and out of your software, your account software. And from that, they will automatically plot a cash flow and a forecast for you. So it does make it a lot quicker and easier. That being said, my warning with all softwares is, again, if you don't fully know what you're doing, be careful. It sounds easy, it looks easy, but sometimes there's a little bit more to these apps and softwares and how they work. And certainly with the apps, the app version of a forecast, you might need an accountant who understands the numbers a bit better, just to make sure that it is actually making sense what's coming out the other end. Number three, use that forecast to spot holes and gaps, as I said, in the current cash flow and forecast. So if you plot out your numbers, you might be shocked to see that in 3 months' time, actually, your bank balance is running very low. And you might struggle to pay wages or suppliers or PAYE or your VAT bill. This will help you spot that. So rather than get to the point and panic because suddenly you've got no money, you'll spot it 2, 3, 4 months ahead, and you'll be able to get something then in place to make sure that you can cover that. And as I said, it can be a short-term thing. So you might not necessarily need a big amount of borrowing over 2, 4, 5 years. You might be able to get a small overdraft or a little credit card or something just to plug that gap, but without knowing where the gap is and why. Again, you can't be ready for that. And do you have a survival pot? So one of the other big things that came up over COVID with us is we've really drummed it into our clients, and hopefully they've carried it on and wheel forwards, is to make sure you have at least 2 to 3 months worth of cash flow available. So have a look at what your usual outgoings each month are and have 2 to 3 times that in a savings bank account, a business savings bank account, but make sure it's put away for a rainy day. Because if suddenly COVID hits again and you have to close your hospitality business, can you survive for that couple of months, even if you had zero income? If you know you've got 2 or 3 months worth of outgoings put away in a pot, you're going to sleep a lot better than you did last year if you suddenly found yourself with no income. So again, start working on that now. I appreciate some businesses don't always make enough profit and spare cash to be able to do that. But even if you could just add to it a little bit and build it up, you'll definitely find things a lot calmer if suddenly we have to close again for a month or 2. Number 4, talk with your suppliers. A couple of reasons. If you do close, don't just do what some businesses do and hide and bury your head and ignore their emails and phone calls. Talk with them. 9 times out of 10, as long as there's communication going, they're likely to give you a bit of easing up on payment terms. They might be able to help you out. If you need a bit more stock, but you haven't initially got the funds, but you will if you can get that stock, talk to them. They might be willing to do something with you. The other thing is talk to them about credit terms. So if you're on a really small credit terms with your supplier, but you've been using them a little while, talk to them. It's worth a conversation. Can you extend it? Can you just add 7 days to it? Anything you can add to your credit terms with suppliers is going to help your cash flow. And at the moment, cash flow is desperately needed to survive over the next 6 months as things pick back up. It's all about open communication. Post-Brexit, and again, I think this has been very underplayed by small business because of COVID. Don't forget, we're now in post-Brexit in terms of importing, exporting, and VAT. It's having quite a major effect. If you import your goods from outside the UK, you probably would have seen that suppliers are suddenly very slow. They might have become a lot more expensive. It's taken you a lot longer to get goods into the country. So be aware of that. And again, factor this into your cash flow. Are you going to have to be paying out more? When are those payments now going to be coming out, etc.? Can you try to avoid all of those issues by looking at UK-based suppliers? But make sure you're keeping Brexit in mind when you're doing all of this planning and not just COVID. And I think that's quite an important point at the moment. As I said earlier, stretch your credit terms. So if they're willing to offer you, if there's a massive business that you buy supplies from, try to stretch those credit terms as long as you can. And when it comes to paying suppliers, as long as you paid by the due date, there's no issue. So that will still maintain a healthy relationship. To maintain a healthy relationship with a supplier doesn't mean you pay them as soon as you receive that invoice. They will actually probably find that silly their end, because they're a business too. They understand it. They've given you a due date for a reason. That due date is giving you that full credit term you're allowed. So if you're not paying on that last day or that last few days, you're ruining your own cash flow. Now, some people will say to me, Ben, but I like to just get things paid and out of the way and put to bed. I appreciate that. But if you keep doing that, you're going to keep running out of cash. And unless it's coming in just as quick, you're going to cause yourself an issue. So at the moment, while you're going to get away with it because of post-COVID, use those credit terms to your advantage. And lastly, as I said earlier, know your numbers. Don't settle for out-of-date information, and at least try to push for weekly bookkeeping. So if your accountant or bookkeeper or in-house person is not keeping your books up to date weekly, don't settle for that. You need to make sure you have real up-to-date live information to act on. Gone are the days where year-end accounts from 8 months ago are useful. Gone are the days where management accounts from 6 months ago are useful. You need to be knowing what your numbers are on a weekly basis. If you don't, how do you know how you're doing? How do you know you've even made a profit? How do you know that when you think you're taking a dividend, actually it's an illegal dividend and you're going to have to be paying that straight back in the future? It's good to have this information live to be able to make these decisions as you go, instead of getting to the point where you then regret what you did several months ago. So that's my sort of quick 5 steps to developing a bit of a better cash flow and forecasting and making sure that you understand your business a bit better and start planning just in case. Now, obviously, hopefully it's a worst case scenario and it doesn't happen. But as the last 18 months have taught us, everything gets opened up and then 2 weeks later, everything gets shut back down again. You don't get warnings. It's not like, what we all would have thought, how things would have operated. How it's actually turned out is the government will close us down literally overnight. There's no warning. So make sure you have this in place, because if that happens, I guarantee from speaking to clients who follow this advice, you'll sleep a lot better. You'll know how many months worth of outgoings you've got stored away. You'll know what your outgoings are. And so you'll know what you need to cover. It's just peace of mind, if nothing else, and good business sense. Cool. Okay, so next up we have Lee from Peninsula. As I said, Peninsula is all things HR and health and safety. So hopefully, through the power of Zoom, I'm going to be able to introduce you to Lee. He says hopefully. So hopefully, Lee, you can now control the slideshow, and I'll leave it over to you. Oh, he says, I just need to click one button, but it's not letting me.
Thank you, Ben. There we go. Okay, yes, good morning, everyone. Ben, thank you again for inviting me. My name is Lee Ward, and I work for Peninsula Business Services. We are the UK's largest provider of HR, employment law and health and safety services. I'm also joined by my colleague Bev Williamson, who is here for any questions that you have at the end. I'm going to make this presentation as brief as possible, to the point. What I did was we kind of worked out areas in hospitality of problems that you guys may be facing, and even if it's nothing there that you can see, but you have any questions, obviously we've got the session at the end, but please take note of my contact details. I'm always on the end of the phone or email to offer any support that you may need. Okay, so Peninsula, we've been protecting employees since 1983. That's not working. Yes, it is. Right. We currently, we're actually just over 35,000 clients now, heading towards 40,000. And we work with small, medium enterprise and large employers. So any company that employs will probably need some kind of support at some point. And we, as you can see, give over 1 million pieces of HR advice per year. And we are open 24/7. Okay. So what I'd like to do is just run through some of the hot topics in hospitality. Okay. National minimum wage and uniform. This has been very big lately. If employees are required to provide their own uniform, or they have to adhere to a certain dress code, any cost consideration could possibly affect their national minimum wage. A recent case a couple of years ago involving a well-known high street restaurant chain was brought into the spotlight as employees were asked to adhere to a certain dress code, but were expected to foot the bill themselves. You need to ensure that you have a well-drafted uniform policy and a deductions from pay agreement to protect the business. And this would ensure that any deductions are lawful. So what they're basically saying is that if you expect employees to pay for their own uniform, it could undercut their national minimum wage. Okay. Sorry, I'm having a little bit of tech issue here, Ben. Sorry about this. Anybody in the hotel industry, so night shift, sleep-in shift, okay. As it stands, there are no changes. There's no changes in. Sorry, just bear with me. Yeah, so under health and safety legislation, employees who are classed as night workers are legally entitled to a health assessment. This is to be undertaken when employment commences and has to be repeated annually. And at such times, any health-related concerns need to be raised, for instance, pregnancy. Okay. Working time regulations need to be checked, as in breaks, breaks between shifts, breaks while on the job, and also you need to establish whether the employee is paid for their sleeping time, or it's classed as a break. So again, strong policies are needed to ascertain that. This is quite a big one at the moment, so be vigilant on checking employees' right to work in the UK, okay, because obviously with Brexit, there's been a lot of changes, and some of your policies may be outdated. So any reviews that you need or anything that you need looking over, I'd be quite happy to run that through with you, all right? Stress-related absence. As hospitality is starting to find its way again and slowly getting back on its feet, I do hope it sort of moves forward a lot quicker for you guys. There has been a lot of reports of stress-related absence in the workplace. You need to make sure that you have meetings with your staff regularly to check on their welfare. Again, we can point you and give you guidance and advice on how that should be conducted. With the right questions to ask. Okay. Stress-related absence is now making up quite a lot of overall absence in the workplace, and it's costing businesses quite a lot of revenue. Okay, so you need to be on top of I will touch on this just a bit later on in the presentation. 0-hour contracts and the restrictions, that also needs to be revisited under a massive piece of employment law legislation change called the Good Work Plan, which was introduced around 2018 and enforced in April 2020. We still find a lot of businesses haven't heard of the Good Work Plan. It really was quite big in employment law. But of course, this was overshadowed by the pandemic. So if you need any educational pieces around how that could affect you as a business owner, again, I'm quite happy to run that through with you. And lastly, on the hospitality topics, ensuring the laws related to young workers are put into practice. Okay. The working time regulations provides increased rest breaks after shorter periods of time for young workers aged between 14 and 16. So these could be part-time weekend workers, okay, and those over compulsory school leaving age, but not yet 18, okay. There are also restrictions on the times of day that these individuals can work, including night and during weekends, during weekdays on term times. All right. Employers must ensure that they are aware of the relevant working time regulation requirements, keeping track of ages of individuals, and ensure that they are aware of the school leaving age, dates within their specific jurisdiction. So young workers do change from district to district. So somebody, say in Derbyshire, may have a different bylaw than somebody in Bristol. Okay. And because of this pandemic, sadly, redundancies are another big topic. Redundancies are really a sensitive area, and if not handled right, it could end up with the employer facing unfair redundancy, or not following processes and procedures the right way could land you in trouble potentially. We at Peninsula can almost pretty much guarantee that when the pandemic subsides a little, the media will be full of adverts like "no win, no claims." Were you made redundant in a fair way during the pandemic? And this is going to raise a lot of cause for concern. So, any advice around redundancies, we can offer that as well. Okay. Just quickly through health and safety. If you are a public-facing business, which most in hospitality are, of course, you must make sure you're COVID secure. The health and safety executives have ramped up activity in spot checking businesses, because the law states that if you haven't got a COVID secure risk assessment and you are taking the right measures for containment, you are likely to be not even warned. They've got a bit of a no-nonsense approach at the moment. They are asking you to close the doors, get your house in order, and then they will consider reopening you. So they really are going to address this in quite a harsh manner. So COVID secure is vital. Infection control measures, they would be contained in your risk assessment, but also, you've got to make sure that you've got your signage, your social distancing on floors, screens where applicable, hand sanitizer, etc. So there's quite a lot of things to factor in and take into consideration. Going back to employee wellbeing, that does fall under health and safety. We need to assess that your employees are fit to work, no matter if that's physical or mental. And there is quite a complex procedure behind this. So something that we again support on. Driving, transport to and from work. We even need to sort of put in procedures for employees that take the bus to work, because on a bus, you are likely to be at high risk in encountering somebody with COVID, and they can then bring that to the workplace and that could be spread. So we need risk assessments around transport. Lone working, any late night receptionists that are on their own, or cleaners that work early hours that are on their own, they need to be risk assessed. Lone working is a very big topic at the moment to ensure that there are safety measures in place, contacts for emergencies, etc. And just generally risk assessments overall. If the health and safety execs do randomly check a business, the first thing they're going to do is look for the COVID measures. And if they find any material breaches, you would more than likely be asked to submit a health and safety report management system, which includes your risk assessments, and they will investigate that further. Part of COVID has induced this. The health and safety execs have also asked for more training and awareness to be introduced to staff. This could cover general topics as well, i.e. screen display equipment, posture, working hours, manual handling, trips, slips and falls. So various hazards. The important thing is with health and safety is evidence and proof. So if you did conduct any training, if you did conduct any staff interviews, if you've risk assessed your hazards, you need to keep that evidence so you can prove that. Health and safety is a funny topic. It's one of the last remaining laws of the land with a reverse burden of proof, which means that if there was ever a breach that reached court or you were reported for a breach, you're actually guilty and have to prove yourself innocent. It kind of works the other way around. So, employee rights. Establish your behaviours. This is where Peninsula are specialised to help employers. You can set your standards and expectations through policies and procedures. In hospitality, we've got quite a large number of hospitality clients. There's not a lot we haven't seen, not a lot we haven't defended. Okay, so we can write you bespoke policies to best suit your business. What that does as an employer, it keeps you on the front foot. It keeps you gaining control of your staff. And hey, look, more productive staff mean a more productive business. Here are just some random policies that I kind of chucked together on a slide, so I'm not going to sort of read them out, but here are some of the things that as employers you may have skipped, not even thought about, okay, but all important. There's a few more. Okay. So, a big one that's missed is just as an example is social media. How do you control what your staff put on their personal social media? What can you control what they post about you as an employer and where they work? In actual fact, you can put policies in to stop any comments on personal social media accounts with regards to their workplace. Okay, the good work plan that I mentioned earlier, it's quite a large document. I really wouldn't recommend you read it. You could be asleep by the time you're halfway through it, because it covers all areas of employment, and some things aren't going to be relevant to you if you're in hospitality. Likewise, there may be something in construction that wouldn't be relevant to them. But what it does is it was a shake-up of employee rights, status, holiday pay, contracts, and a little bit more on agency workers, okay? I will just give you a couple of examples that are key. Contracts. The content of a contract has to be reviewed and brought up to a compliant level, okay? So the content needs to be changed if you've not reviewed it, certainly in the last couple of years, okay? Also, contracts need to be issued to an employee within 24 hours of the job acceptance. You can still put probationary clauses in, but please, anybody new that you're taking on, you need to get that contract to them as soon as they've accepted. Okay. So, yeah, statement of main terms and contracts. But sorry, I've just touched on that. I'm skipping ahead myself. It just does what it says on the tin. Please come to me if you need some advice. Okay. Health and safety check. Have you got a policy? Is it regularly updated? Are all your new employees trained and guided through the induction? And do you have proof of it? Okay. All staff and management are fully aware of their health and safety responsibilities. Do you offer ongoing training? And is there a system in place for accident reporting? That's not just for your staff, but for your customers. Okay. And if you have 5 or more staff, you are legally required to have a competent person. Okay. That is somebody who really should have a basic health and safety qualification. All services that we offer, excuse me, my throat is a bit dry. All services that we offer, all the guidance, documentation, etc. that you need can be provided by us. And now I've skipped. There we go. Thank you. So, in essence, Peninsula is made up of 4 elements of a service, and that is the consultancy and documentation stage. That's where we come in, review what you have, build on what you have, make it compliant and maintain that compliancy. The second part is advice. So as things throw up certain subjects, maybe staff misbehaving or turning up late or long-term sickness, the advice team work 24/7 to guide you through the correct procedures and processes. We offer software. It's in-house. It will help run your HR, including things like holidays. You can distribute your documentation to your staff direct. It's all done via an app. And the fourth element is insurance. So we're very confident in our work. And if anything was to make it to tribunal, for instance, we would go on your behalf, represent you. And if we lost, we would cover your legal fees and most compensatory awards. The health and safety service pretty much mirrors that. So, yeah, if you need any advice, if you have associates, friends, family in business, just one-off questions, I welcome everything if I can help you. Thank you very much.
Brilliant. Thank you, Lee. I mean, the biggest takeaway from that is if you haven't considered your health and safety or your HR requirements as a business owner, you really should do. It's often too late if something arises and you haven't thought about it. Sometimes it's too late to then backtrack and put stuff in place. And sadly, every business owner who employs will at least at some point come to a situation where this sort of thing does affect you, and it's one of those areas that I find when I talk to small business owners, it's one of those areas that they overlook. But please don't overlook it. It's really easy to think it doesn't apply to you, or this sort of thing wouldn't happen to you, or your employees and your team are fantastic, there'll never be an issue. Sadly, there will if you stay in business long enough and have employees. Sadly, at some point you will come across something, and it's not just about that. As you said, you might have a random investigation. Certainly, hospitality industry are getting them all the time. Even other businesses, like I was having my haircut the other week, and somebody just coming off the road to check COVID restrictions were being followed. So it really does happen and can happen, and it can be quite a large impact and effect on a small business. So just make sure you're covered. These things aren't costly. Even if you get people to step in and do it for you because you're really busy, it still doesn't have to be a huge cost, but the alternative could be. So great. Okay, so we're going to wrap it up there. I'm sure there's lots of cheers out there in the background. What I'm going to do here is just pop up our contact details, so I'll stay there for a minute. If you need to contact any of those people, there's the email addresses, pop them an email. I know everybody on there is going to be happy to answer your questions, speak to you, and see if they can help you out. I've had a few direct messages And I think there's something on chat as well, asking for the slides and the recording. So of course, we'll get all of that sent out over the next few days for you as well. Cool. So I don't think there were any Q&As. So on that basis, we're going to end it here. Thanks for all of you that did turn up and listen in, and hopefully there was something from those three conversations that you can take away and use. But as I said, feel free to contact us if you need to. Great. Okay. Well, we'll get that emailed out in the next few days, but otherwise, have a good day. And yeah, speak to you soon.